morning, everybody, and welcome back to the Steps to Soul podcast. Today, we are going to cover a pretty common topic, but maybe some people haven't dove into a lot, which is the silver tsunami, baby boomers exiting the market and the $1 trillion opportunity. Chris, I know when I got started, my dad mentioned this was coming, 13 years ago. I talked about last week with George when you had to miss the podcast about, I asked him, where do you see the volume looking like in the next 5 to 10 years? Is the wave real? Is it going to be as big as people think? There's a lot to discuss. We see trickles of it now. As you know, tsunamis don't come in one wave, they come in waves, as people tend to forget. We think of one big wave, but it's multiple waves. I think some of those waves aren't going to be as big as people think, but hey, we're going to discuss that today and kind of give our insights, what we see and how it's going to change the industry and how it's going to change the buyer market, especially. I think there's a lot of great stuff there. Start off though, how you doing? You doing all right? Been doing well?
Good, man. Doing good. I forgot to shave today. Sorry.
You and me both. You talked to the baby boomers at all lately? I feel like everyone who calls us is like, hey, when are the old guys going to die and give us their business? It's like,
Yeah.
it's not quite that simple. I wish I could tell you otherwise. Easy for us.
Yeah, I talk to them all the time, right? That's who calls us for the most part, unless you catch some guy my age or your age that happens to want to exit early for some reason. But no, you're exactly right. We're standing on the edge of one of the largest ownership transfers in modern history, and especially in our lifetime. We've got that baby boomers, many of whom have built successful businesses from the ground up. They're reaching retirement age, so it's about to happen if it's not already.
You're right. I mean, let's clear it up for some people. Technically, the baby boomers are considered from 1946 to 1964. Estimated 50 to 60% of all businesses in the U.S. are owned by baby boomers, and roughly 10,000 of them pass away a day. So, granted, they're not all business owners, but their wealth, ability to acquire wealth over their lifetime was incredible compared to previous generations. So, not only do you have a flood of baby boomers leaving the market who own businesses, you have that transfer of wealth and capital into a buyer base, whether it's 50, 60, 40-year-olds. You're going to see that transfer wealth into families that are going to start having to want to invest that money, and not just traditionally like in the market or in CDs or other forms of banking. They're going to say, maybe we should buy business, control our destiny. With AI today and a lot of jobs being, let's say, eliminated over the next decade or two, business ownership is going to be a very unique position to be in. And it's going to be interesting how it kind of, creates. I don't know if it's going to create as many businesses for sale as people think. Remember, not all businesses are sellable. We've talked about this. Not all are ready to sell. And quite frankly, not all can be transferred apples to apples. You've got licensing, you've got experience, and we've covered this on the podcast a ton of times. People have to remember, just because the boomers are passing, it doesn't mean they're all going to be for sale. Let's talk about, we talk about transition of ownership. You've got, father to son, you've got partner to partner, you've got transition to their family members, strategic buyers. Private equity realized this a long time ago. Strategic buyers realized this was coming a long time ago and have already been attacking the trade businesses, right? How much have we seen interest into HVAC, plumbing, electrical, a lot of boomer-owned type businesses that have been flooded with activity to direct access, right? How many of those never hit the market because of that, right, Chris?
Yeah, I mean, you're going to have activity in manufacturing, services. You think about all the businesses that boomers have started and where they're at right now. The sheer volume of businesses that is going to change the market dynamics is going to be incredible, right? You're going to have I guess my biggest concern is are the buyers that are going to want these businesses, are they qualified to be buying them and run them the same way the boomers have? Obviously, it's going to be a different take for the most part. I'm generalizing a statement there, but that's kind of something I think about. Is we always see that we have buyers that inquire about businesses that they have no business even looking at because they're not qualified, they don't have the right licensing. So I think we got to be ready for that. Some businesses may have to sell at a discount because there's just not a large enough buyer pool that can take them over. Honestly, that's a thought I've had.
I don't disagree. They say peak activity is coming between 2025 and 2035, and you mentioned those specific industries. The biggest issue I see with qualifications for these owners to sell is these guys worked 40, 50, 60 hours a week. My dad used to joke, that generation is going to die at their desk. They are not going to go off into retirement and sit on the beach, most of them. They're going to want to spend their time at their desk, in their business. The generations coming up, you and I notice, they don't want to work 60-hour weeks, right? They don't want to work 50-hour weeks. And the way these boomers have built these businesses is that they're there and they're driving the culture of the company. I also think, in all respects, as far as the culture, buyers today want everything to be so modernized. A lot of these businesses are not going to be fully optimized. Some are going to be up to date, but they're not going to be prepared exactly how the younger generations want them and to absorb them, even as strategic. How many boomer businesses do we see that aren't even on proper QuickBooks or pay or proper accounting methods? That's going to be the issue. I think is the biggest hurdle for most people. So we talked about. I mentioned the peak is coming. They call it the $1 trillion opportunity, right? All this money's hitting the market. They say estimated value of $10 trillion in businesses is going to basically exchange hands over the next decade. My gut is there's not going to be as big a wave as people think. I think you're going to see a wave in certain sectors, but as far as the total volume, it will be up from previous years. I think brokers who understand that AI can capture that and do a lot more volume. But realistically, I do not see the wave as big as some people think. I think there's been a lot more B2B acquisition. I think we notice that in emails we get from sellers. Hey, I've got equity groups reaching out to me. I've got buyers reaching out to me. I've got my own customers I'm going to possibly sell to. I don't know as many of the opportunities are going to hit the market as are available. My concern for those owners is if you wait till the owner passes, we talked about exit planning, or wait till something happens, you're going to see a lot of business enter the market, but some are going to be crippled because of that, right? How much have we talked about strategy, preparing, getting the business ready to sell? If those guys have not let go of control and prepared to that, they're going to enter the market, like you said, have to take a discount.
Yeah. No, you're exactly all right. If you're a seller, if you're a business owner, the key for you is going to be readiness, right? With strong positioning, you're not just exiting, but you're trying to maximize decades of effort and creating long-term stability for you, your family, your employees, whatever the case may be. But you're exactly right. If you wait too long or ignore the competition heating up, you're probably going to miss out on the generational window. Because, like I said before, there's only going to be so many buyers. There's so much selling that's going to happen, but it's not like there's a buyer for every business out there. Ideally, there is, but the cash and the amount of buyers in the marketplace just won't be there to match. I don't think.
And I think we have kind of a conundrum happening too. In the last few years, we've seen multiples really grow, and we've seen cash flows really grow on business sizes of all shapes and sizes. The values have gone up. The financing, the way it's set up right now, is not strategically set up to capture this 25, that big 2025 to 2035 wave. I think we've talked about needing to raise the ceiling of the SBA limit. The problem is at 5 million, some of these businesses, and a lot of these are owned by boomers, are between $5 and $50 million in revenue. They're going to well surpass that ceiling for the SBA. So how are buyers, even capable buyers of capital, going to be able to acquire them? It's going to drive a lot of the silver tsunami sellers into very small buyer pools of private equity, strategic, or those who have capital, ability to raise capital. Now, yes, you see a lot of family offices, a lot of other groups trying to get in this mix, but let's be honest, Chris, it's not that easy. And unless the SBA raises, especially when you're talking about manufacturing, right? Trump's trying to bring manufacturing back into the country. I don't know if the buyer market is positioned to even acquire these deals. If not, if they're sold at a discount, how much is that going to hurt the wave? If the first ones to get in and sell for the best price are going to be lucky, but the back end, if people can't start afford to buy these businesses and discounts begin to reflect in the prices, we're going to see values almost, hate to say it, get lowered and hurt the market overall in value.
Yeah. No, I'm seeing that already. I just got off the phone with a seller literally before we jumped on the podcast, right? And doing about $15 million in revenue, profitability is close to $2 million. So let's just throw a 4x. I haven't done the
Yeah,
research
just
yet.
a quick,
Quick
estimate.
analysis, throwing round numbers and using the super easy formula.
That's right.
I don't recommend it, but that's my disclaimer. But we're at $8 million. Nobody can afford to buy this unless the seller's going to take a $3 million seller note, earn out, something like that. And that is part of it. I get
Or
that
partial
deal
buyout.
structure. But should the seller really have to do that just because SBA and government guidelines won't increase this $5 million cap to 10 million to meet? We've got inflation. We need to grow that. In so certain states, hourly wages have gone way up. Not in Louisiana, but
Look at California.
yeah. What is minimum wage in California? 20,
Like
20
25,
bucks?
something like that. It's incredibly different from different state to state now.
Yeah. But yeah, that's going to be a real risk factor, is that you go to market, and if you want above 5 million, or if your business is worth above 5 million, your buyer pool is so shrunk unless you're willing to be very creative in deal structuring, which I always recommend the clients, don't give up a huge amount of seller financing. 5-10% is okay. You get above 25, 50% seller financing, you may never see that money. You and I both know that. And so, but if that's what it has to happen to make the deal possible, there's going to be some mindset shift, right?
You're right. And you're talking personal guarantees of that level. That's
Mm,
and
yeah.
being in a second position to a bank if there's financing on top of that, that's brutal. One thing my dad always talked about that, I never forgot, he mentioned there's $1 trillion opportunity. It's also the $1 trillion disaster. And by that he means is capital is going to be pulled out of the market. When these businesses sell, close, or don't get transferred, that wealth is going to leave individuals spending it and creating in the economy and put into savings. Let's say children of the owners are going to absorb all that wealth and get transferred to them. Most of them are going to be older up in age and retire. They're not going to spend that money. They're going to put it in their pocket. Yes, there will be some spending on maybe nicer houses or a secondary home or a car, maybe pay off some debt. All that capital base is going to be sucked right out the market, right? And my dad always wondered, how's that going to affect the economy too? Because if people pull all their money out and it gets hoarded by smaller and smaller, yes, it's going to be trickled down to more children, but it's going to pull that money out the market into a smaller finite group of people. How's that going to affect the long-term growth of the economy? Is it going to be tucked away? Or, for example, people maybe didn't have it off as easy and were able to grow wealth like their parents in the boomer generation, where you could buy a house for $20,000 selling for $1 million now, right? It's insane. Some markets, they're going to hold on to that money. Or worse, those companies aren't going to get the capital infusion because the kids are going to say, I don't want to deal with this headache. Just get rid of it. Like, how many jobs are going to be lost? Or how much is AI going to cripple these companies by the time they come to market? We mentioned 2025, 2035 is the big wave, or the waves of business hitting the market. Let's be honest. If AI starts to take jobs away from these companies, yes, it may optimize them and may cut costs, but we're going to see a massive influx of people needing to work. It's a very weird time to be alive. You're going to see the greatest shift in economic terms this world's ever seen. The world follows the American economy, and this is going to dramatically change what happens. And I don't know if anybody really has a good answer. We certainly don't know all the facts. I'm worried the wave is not as big as people said it was going to be entering the market, and that buyers are being told you've got to take advantage of it. You see younger guys come into the market as buyers wanting to get on that wave. I don't know if it's all there, right? I don't know if their ability to buy, the availability of inventory coming in is going to be as the quality it needs to be. And we'll talk a little bit how they can improve that later on the podcast. Or is the financing going to be there to support it? Because rates the way they are now, with the ceilings already being maxed out, that's a very tough combination to get deals done unless you're just extremely well capitalized, correct? I mean, I don't know.
No, you're exactly right. And I think everything you're talking about here comes back to one word in my mind: timing, right? You better be ready with timing. And how do you get the timing right? You get prepared. You're
You
ready
sit down
when
today if you haven't.
you're ready to move today, whether you do it or not. But you need to be prepared, because what's going to happen as all these boomers, then the wave that we keep talking about, buyers are going to get pickier, right? They're going to have more opportunities. It's going to be a buyer's market at some point, because there's going to be so many
Mm-hmm.
opportunities out there. At least that's what kind of I'm forecasting. They're going to start passing on the fixer uppers. In hard times, they take a fixer upper and they do whatever they need to. They're not going to have to do that, because they're going to have their choice of businesses. So what are they going to pursue? They're going to pursue the well documented, the well
Mm-hmm.
led businesses, the ones that have
Mm-hmm.
management in place. And from a buyer side, sorting through that noise and finding those is going to be the challenge for them. But they're going to have those opportunities to do it. So I would say, if you're a seller and you're still looking at your business through what I call rose colored glasses, if you're tied to it emotionally and asking, stop asking for prices of your business that
Mm-hmm.
don't reflect market realities. Be ready to go to market with a realistic asking price. And that's where Brandon and myself can come in and help out and kind of show you
Mm-hmm.
what that looks like. But yeah, that's going to be the hard challenge for sellers, I think, is that they're going against a lot of other businesses that are going to market at the same time.
You're not wrong. And we see that today. If you go to the market with certain EBITDA metrics right now, you're going to get overloaded with buyers. Buyers are there right now at chomping at the bit to get these deals. And the ones that strategically get to market a little bit earlier and prepare are going to get the better offers. The ones that wait and the ones that just kind of hang on and don't want to make changes, you're going to be in a more difficult position. I mentioned AI earlier. I want to reiterate to this. The way businesses are being run, structured, and optimized is very important. And if you're a seller and you're not adapting these technological changes, especially ones that me and George Wilmer talked about in the last podcast, you're going to be, if you were a Corvette, you're going to be an older beat up Mustang. The ones that optimize and prepare and structure, like you said, get the books right, strategically make proper decisions, they're going to still sell for a premium. Everybody else is going to be a little bit discounted. And that's no reflection on all the work you've done. And what I worry is that generation doesn't understand the shifts in technology. My father didn't. Granted, he was born in 44. He missed the technical cutoff, but he was a boomer. To him, it was like, I don't even know in the last 5 years how much has changed. I can't comprehend it. I worry for those companies that have not thought long and hard about how to transition that, because they want to reward employees. Because back then, the boomers, you took a job somewhere, you stayed there your whole life, right? You worked 40 years at a big company, you earned credibility, you got your pension. And that mindset of grinding through and not making changes to some degree, I think is going to hurt a lot of them. And we stress to you, if you're listening, or you have a loved one that needs to hear this, especially the younger people listening. I doubt many 80-year-olds have Spotify and want to listen to the podcast. But for those of you who know somebody, this is for you. Take our notes today and bring it to that person and say, have you thought about this, and are you ready? Because what you do not want is that 75-year-old boomer who owns that business to get sick, have the spouse take over, or something go wrong, go into probate, whatever it may be. When that volume hits the market and you're struggling to get your crutches back underneath you, you're going to miss the wave. You're going to miss out on what you've worked decades for. I'm going to say decades for. I've been there. We talked about on the podcast a few episodes back. I went through all that transition. Me and Chris highlighted what you need to do. Please, please, please do not make that mistake. Okay. And I want to stress this to buyers too. The people who built these businesses are not dumb. Just because they've not modernized does not mean they don't know what they're doing. These are strategically smart businessmen who have made it for multiple decades, more than you or I have, Chris. Let's be honest. These guys have weathered all kinds of issues. The digital age, pre-digital. Not every business needs to be optimized, chopped up, and reinvented. It may be great the way it is. It's just not perfect. Buyers out there looking for the unicorn, it's still not there. Let's make that clear. The unicorn is still not there. It's not perfect. And if you find it, congratulations. Please tell me where it was and show me the data so I can verify, because I want to find a unicorn too. I want to say that I was told I was wrong. It's not there.
Yeah. No, I think, yeah, go ahead.
No, go. I was letting frustration out there on that one.
I get you, man. We've got plenty built up from conversations with buyers and sellers, and trying to, do what we do every day. But, if you're a business owner and you're looking for that window to start opening, take this podcast and take what we're saying today. This is the window opening. The window is now, somebody's lifting right now, and it's going to be open maybe for the next 5-10 years. And so even if you're not ready to sell, if you're not ready to go, that's fine. Get the timing right. Interest rates aren't great right now either. So that kind of, once those start coming down, the timing will get a little better. But preparation is, I think, what we're talking about. It's not optional anymore. It's not going to be optional as we go through the next 10 years. It's going to be mandatory. So that means starting at least, now, working for the next 2, 3, 5 years, however long it takes to get ready, but clean, accurate financials, documented operations. If you don't have a solid management team, or a team that knows how to run the business without you, start working on that stuff. The reality
Absolutely
is that a buyer is going to pay you a premium for that stability in your business. The transferability, right? That's what we're always talking about, transferability. If your business isn't transferable because it's all in your head and you run everything, you don't have a sellable business. So start working on all that now, because we're opening this window. This window has been opened, and preparation is what needs to happen right now.
You said it best, Eric. The knowledge in your head. My dad used to always stress telling me sometimes same thing 4 or 5, 6 times in a row. But I've had guys make point, older gentlemen I spoke to as well, make point. They know a lot of information, and they just want to make sure they get it out. They don't want it to be forgotten. That was a generation that prided themselves really on developing knowledge and a skill. Like, a skill mattered. Like, my dad loved that he had skills he could work with, whether it be people, carpentry, whatever that may be. And he really wanted to share that knowledge. If you've got that knowledge, get it on paper, get it into employees, get it into management. That's more valuable than maybe behind what your historical financials are. That's the second most important part of your business, especially if there's licensing, HVAC, plumbing, healthcare, what. Transfer that knowledge, because that is generational. That is something that no young man coming in to buy your company can just absorb in one day. But if you lay it out there, like you said, have the means, train your staff, prepare. Now you've got real value. That person sees what they're buying, not just in the physical hard assets, but the blue sky has intangible value too. It may not be easy to define the true value of that document you've written, but that buyer can see it. And there's a lot of aggressive buyers out there that are willing to take the risk. Let's not downplay buyers that are maybe younger or not as capitalized. They are not dumb people. They're smart. Many of them are very good. But you said it best, transferability. And they understand that, I think. I think that's what they're more scared of than anything is, I know I can take the risk. I'll sign the note. But can I get it done? Can I trust this owner's going to give me the tools from his tool belt that will fit on my waist that I can take into the job site? That is where your business is going to stand out the most, besides just historical data and having the information prepared. Can you get it to them? And can they absorb it? And can it be done? Creative deal structure can help fix the gaps. Having good books and a good team, accountants and lawyers involved will help get the deal done. But you said it best, transferability. That belt. If I can't put that belt from my pants onto your pants and you walk into business day one and start doing some items correctly, your business is as good as dead in the water, unless you want to do an ESOP, sell to employees, or just leverage buyout. None of those are often preferred options for a lot of owners. Let's be honest. No one wants to do a leverage buyout with no money down or hardly anything, and you hope you get something done, right? I mean, I worry some owners are going to fall into their employees and go, I just have anybody to sell to. I guess I'll just let them figure it out. Don't let your life's work get turned into that, please. No, and I don't mean that doesn't work for some situations. That's great if it works for your people and you've got a great team. There are some really good ESOPs out there. All that being said, you got to take it all with a grain of salt. And I worry that the boomers let's talk about this, what they don't understand. They really don't understand financing for business sales. And I think we spend a lot of time talking about that, you and I, Chris, educating the public. Because if you're going to get business deals done, you're going to have to most likely have financing, right? Unless we're all just mega rich millionaires with tons of capital. If you've not structured your business where it can be financed, you are dead in the water right now. Take what we told you before, all those points, and add it up. Speak to an expert like ourselves. Let's get you in touch with a good quality lender who can help you understand what it's going to take to get a deal done for your type of industry. Because every industry's requirements for lending are different too. It's not generic across the board. Understand that. That's going to help you get it sold. That's what I think the wave is going to be an issue with too. I see a lot of those businesses already got purchased with SBA when the rates were low, right, Chris? But 3 or 4 years ago when rates were super low, we saw a massive amount of business deals getting done. Margins were pushed up. Values were elevated because debt service was there. It's tapered back down. SBA, we talked about it in June. SOP did a big drawback. We need that ceiling raised. We need the funding to help out. They need to allow for different creative structures for rollover equity again and not tying these owners up. It doesn't mean you can't go to market now, but if you don't start now preparing, you may only get 2 or 3 good offers ever to get out. You need to be able to capitalize on them when they come, especially as buyers. And we talk about this wave coming in. It may come in spurts. It may come in when the rates drop and all these owners get excited and they sell their company. And then it may dry up again. Remember, tsunamis are not one big wave. They're multiple waves that come in. I don't know if and there may be some that are, let's talk about this strategically. There may be certain industries that get hot. HVAC and plumbing already got rated, electrical. Maybe it's healthcare next. Maybe it's manufacturing. Probably manufacturing in the next few years because of Trump's new initiatives. Maybe it's retail. How much promotional products do we see hitting the market now that we never saw 4 or 5 years ago? That industry is exploding as far in popularity.
You know what I'm seeing a lot these days is a couple of my listings is obviously the manufacturing, yes, because we're trying to bring it all back home, but the robotics, integration, automation, all that stuff, of course. But the other one that always has been hot for the past year with me is freight brokerage. And
That's
it's
a great
really
point.
It's just the transportation and these businesses that are getting product from where they are to where they need to be, and anything to do with that. That's kind of a interesting. It's been an interesting deal point for me of seeing that activity on those listings. Yeah, just kind of throwing that out there as far as giving buyers some kind of heads up on what's going on out there and where industries that are hot.
You make a great point about freight brokerage and what makes it popular and what kind of how buyers view it in boomers leaving the market. It's relationships.
Yeah.
It's scalable and relationships. In freight brokerage, you have minimal asset cost. You've got a lot of relationships, mostly repeat customers. And it's not overly technical. It's transferable, right? When you talk about it's transferable. This is not a license-based business where you have to have 20 years experience to go in that house and fix that product. And buyers are realizing that. And with AI today, simplifying work and allowing you to maximize your productivity, businesses like that can be, how much can they be scaled?
Yeah.
Right?
Yeah. It's
Same for promotional products.
yeah.
You maybe need one good warehouse on each side of the country. I talked to a promotional products company that specialized in selling Peter Millar gear yesterday for corporate groups. They said, look, we're always looking to grow. He said, look, we've got an East Coast warehouse. We can get stuff out within 2 weeks, which is very fast for promotional, especially for customized work. He said, but we'd love to get the West Coast location because we don't want to ship it that cost. So we can get a second location, another group. He says, we can do all the headquarters out of Providence. But man, if we could get something on the West Coast, we could expand inventory delivery times dramatically. They're like, we don't mind paying for it
Right.
because we know we'll
Right.
make it back.
Right.
I see businesses like that are not optimized, like we talked about, hitting the market, that buyers are realizing, boomers have built these, but man, we can turn, they're optimized, but how much can we really improve them?
Yeah. No, that's you kind of segue in my talking to buyers, kind of giving some advice in regards to freight brokerage. If you're a buyer, you need to be ready as well. We've talked this whole podcast about
Excellent
sellers being
point.
ready, but come to the table ready. Don't just be ready to search the online listings and send out an email. If the deals
Mm-hmm.
won't go to the highest bidder always, but they're going to go to the most credible and prepared buyers.
That doesn't mean
And
pocket listings either for us. Let me make that clear. We're not pocket listing and not pretending to call buyers. Buyers, don't fall for that guru nonsense. Let's make that
no,
clear.
no. But I think what I mean by saying that is like have your financing lined up. Have
Yes.
a bank that you're already working with. Tell them what you're trying to do, and have that pre-approval letter ready. That way, they have all your documentation, your tax returns, your financials, and they've approved you for a certain amount to go out to the market and find a business. Yes, you're still going to have to do,
Some
run the
homework.
business by them and do all that stuff, but have those funds and pre-approval in place. Have that advisory team. Make sure you're CPA and have an attorney ready, or some kind of relationship, and start building relationships with brokers, reaching out to them. No, we're not going to respond all the time because I get inundated with buyers reaching out. But if you look more credible and you tell me exactly what you're looking for, and it's not the same as every other email that
Generic
I get,
landing pitch page.
yeah,
Yeah.
$1 million EBITDA, manufacturing, blah blah blah. It's like focus on those deals that you are actually
Mm-hmm.
qualified to buy, not just because you heard that this is where you need to be.
It's a cool industry and the wave is going
Yeah.
there. Don't
Yeah.
don't chase the wave. Find a wave you want to ride as a surfer, for lack of better
And I
metaphors.
would say don't be afraid of creative deal structures, but understand that sellers probably aren't open
Gonna
to
love it.
heavy earnouts. They're definitely not open to 100% seller financing. Don't even propose 50% seller financing. If you need 5 or 10 to make it possible because there's a customer concentration issue or there's some valid reason why you need that, then yeah,
Very
sure,
pragmatic.
that's fine. And if you're a larger company or if you own 2 or 3 companies and you're asking the seller to roll over equity, then possible. But if this is your first business buying,
The
the
private
seller,
investor, as we
yeah,
call it.
the seller is not gonna roll over equity just to watch you, take his business and see what you can do with it. You're not proven. So, in this market where everybody wants a piece of the action, the most prepared players, the most prepared buyers are gonna win.
You're so correct. And I even add to that point about lending. When you reach out to lenders, don't just get the first 5 that pop up on Google SBA. There's a lot of high volume lenders. Find ones that understand your industry you want to be in. Because there's a lot of big lenders out there that don't lend on any certain categories, period. They just don't want to, and they don't have to because of the risk. Like, for example, I know Live Oak really doesn't like construction. There's going to be a lot of really good contractors and business. Live Oak doesn't lend on that typically, a certain volume. So don't just assume because you found the biggest lender that they're going to be the best fit for you in your industry you want to be in. Do some homework on these lenders. What do they really do a lot of deals in? Do they have specialties? The BDOs at those banks, see what their background is. We use Huey Tran a lot for our deals. He loves daycares. He started underwriting daycare. So when we bring him a daycare, that's his bread and butter, man. He's got it back, forward, backwards, left, right. That slam dunk can do something most other lenders can't do because he knows that business so well. And you're right. Get pre-qualified. Pick the right lender. Understand what they're going to help you with, and then establish proper relationships. If you really want to be in the promotional products business, for lack of better examples, start doing research on Facebook groups where those people go to conferences. Start getting to understand the industry, understand industry lingo. So when you go to talk to a broker about buying the business, you can kind of speak the language. That's going to give you a massive leg up in having conversations. How often do we see people come in saying, I want to buy the boring business? Okay. What do you know about washaterias? Well, I just know they have a cash component and they make money. Great start. You're recycling the same lingo everyone else says. How about you learn what are the most common machines used in that industry, what they cost, what the capital expenditure per year averages for a business like that. That way, when you see the numbers, one, you'll be able to identify, are those numbers legit if they're being advertised? Two, do they make sense? And three, you'll have a better understanding of what you're diving into. It will speed up your learning curve and what you're looking to acquire, because you may find 2 or 3 good deals in that market, but you'll be better prepared to make an analysis and an offer on the one you like the most. If you're just going to be out there and you're going to be a buyer, and I'm going to say this again, and you're just going to chase cash flow, do not waste my time and call me or Chris. I'm not going to speak for you, Chris, but I think you feel the same way.
You know, I do.
Now, there may be opportunities like that with the waves coming in. Just understand, if you don't do your homework, you don't prepare, and you don't, I don't want to say specialize, but take an hour of your time a week and do some homework on that industry. Don't just read the latest Biz Buy Sell blog or some blog you saw on LinkedIn about how great this industry is. Dive into it. Understand it. Look at what they're selling for right now before you start wanting to make a move. Go through Biz Buy Sell. Go through our Sunbelt site. Go through Tupelo. Look at what those are trading for. Look at some historical data. If you need help, talk to us. We would love for you to say, hey, I really want to buy a promotional products business. I love that industry. I've done my homework. I've seen what they're selling for. What do you think? That tells you right now you're a focused buyer. You've gotten qualified. You're ready to move. And yes, you're going to be at the top of the list when the right deal comes along. It's going to help you get access to what you want. You know, you don't walk up to a girl and say, hey, I want to get married. It doesn't work like that. You got to date. You got to work to get trust and relationship to move to those next major steps. Be the smart buyer. And if you're not going to be a smart buyer, please stay out the market and spare all of us our time, and the sellers too. Sorry, just had to say that. I've had too many calls like that lately.
Yeah. Understand your frustration.
Well, no, it's a lack of education on our part, perhaps, too, that we haven't done enough to educate buyers. Maybe it's a failure in our industry. You know, I talked with Sunbelt Corporate about doing seminars like that, and we want to help people make the right decisions and educate you. Because if you're educated and you come out with the right approach, you're going to increase your chances of getting the deal done. We're going to increase our chances of getting the deal done and help the sellers. And everybody wins with better deal structure, going in with a full understanding of what it's going to take to get a deal done. When all parties are walking blind, it's a heck of a lot harder to guide and help everybody achieve what they want to achieve. And that goes back to our boomer conversation. Be prepared. Get ready. If you're not getting ready, you need to start getting ready now. And honestly, you need to be understanding that there may be a wave in your industry of excitement. When that wave starts to peak, you need to be ready to sell. Don't wait till that wave tapers off. It doesn't mean you won't be able to sell it, but just no one can predict what industries are going to get hot as quick as they are. With an administration like we have now, just changing rules by the day, changing industry by the day, you may be the next one up to get attacked or benefit from, for all you know.
Right.
Get ready strategically. Get ready, get ready, get ready. Don't know what else to say except get ready.
Yeah.
The waves are coming. Be prepared.
So true. It's no longer theoretical, right?
It's not.
It's here. If you're a seller, preparation is everything. And if you're a buyer, get ready too. This could be the best environment. This may be what you've been waiting for. If you've been on the sidelines,
the golden ticket.
Yeah, if you've been waiting, this could be it. You might see the environment that you need to see to move forward. And I would say this even too, for those of us in advisory roles, whether you're a broker, accountant, attorney, this is our call to action, because we're about to bridge the gap between 2 generations, right? We got to do our part too. And so we're going to have to help navigate both sides of how to get these deals done with clarity, with confidence, with transparency, fully transparent. Here's the truth. The wave is coming whether we like it or not. And the sellers that are prepared, they're going to ride that wave. They're going to benefit from it. But the ones who aren't prepared, what's going to happen? They're going to get pulled under. They're not going to survive. They're going to miss their window of opportunity. They're going to be, I hate these calls. I really hate these calls. I get these calls from guys who are much too old to be thinking about selling the business. They should have thought about it 10 years ago.
You're right.
And now their business, at one time, maybe they had $500,000 of profitability. And then when I get their most recent tax return, it's often near zero or even negative. And it's like, don't let that happen to your business. Please, like, be prepared. Let's wait for this wave to start coming in. I'd like to see interest rates lowered. I'd like to see more stability in our economy. And I think it's coming. I really do. I think we'll get there. I think we'll get adjusted here.
We're stabilizing.
Might not be 25, might be 26, 27. I don't know. I'm not a economist, but I'm hopeful. I don't
from
know if
what we
that.
see on our end.
I don't know. I don't know.
But we get a very
Yeah,
unique perspective. We see it from multiple different angles because we're seeing the books come in
yeah,
as they are. Unlike
yeah,
economists and other reporting groups that get financial data every quarter, maybe every half a year to a year to analyze, we're seeing it from owners who send us their P&Ls daily.
yeah.
We're
And
seeing the
buyers.
trends. We are.
We're hearing from buyers what they're willing to pay. So we are like frontline, kind of
We
got that
are.
information.
Besides the bookkeeper in the business or the CPA doing the weekly whatever P&L or monthly P&Ls, we're there. We see it. And I tell, because I get asked all the time, like these, private wealth management groups or other investment funds, like, what do you think's going to happen with our clients? I'm like, if they haven't started now, you're missing the boat too, because you're going to have a wave of assets that hit your front door. And if they're not prepared to sell you, you're going to lose out too. And I was meeting with a good buddy of mine who works as a partner at a private wealth management firm. And I was like, look, we can greatly help y'all. Y'all have valuation software. That software is only as good as the data inputted and who's able to kind of understand it. We're on the front lines actually seeing the metrics, seeing the multiples, seeing the deal structure. That's two very different outcomes often from valuation software. We talk about AI changing. AI is not there yet. If you really want your clients to be positioned to get the best market value, you need to get us involved earlier to make sure they know exactly what their likely outcome is, not what some tunnel of a program gave them a spit out of an image, right? A quick, like we talked about, put a 4 on it and say it's going to be worth 8 million, like you said earlier. That is so important. And the owner's already having those conversations. Good. You've started. Good. But take it a step further and get that relationship with that advisor now, because, and I always stress this too, we don't have pocket listings. I don't believe in that policy. I don't like that. I think it creates a lack of market value for the owner. Let's make that clear. I want the market to tell you what you're worth. That being said, we get a lot of good buyers, and sometimes it's nice to tell a seller, hey, look, we have a buyer X that's very qualified, has bought from us previously, looking for stuff like you. When you're serious, let's go to market. Granted, that buyer's probably going to get the first quote unquote crack at it, but it's going to hit the market at the same time. It's not going to be never advertised, never sent out there. We're going to get other buyer inquiries. But the sellers, if we can help you prepare and present that to you, you're going to get a better understanding of what you're really worth. Don't just hope for the golden ticket. Go capture it.
Well,
It is. I think so. And then to wrap it up, the silver tsunami is going to happen. It's going to come in waves. It will vary by industry, by timing. If there's economic conditions that might shift, it may get compressed. It may get drawn out. But if you ever want to be an entrepreneur and take your own risk, if you're a buyer, you're not capitalized now, start working on that. Start saving. Start getting ready. You're not going to miss the wave this year or next year. You're going to have time. And the sellers out there, do your diligence, speak to proper advisors, get good advice, and weigh your options. Because once the wave gets rolling, the surfers that get left behind are going to miss out, are going to hit the beach last with the girls already there looking to pick up. I mean, hey, don't be the last guy getting on the board hoping to make a splash. Be there, be ready, and understand it's not going to be a one formula fits all. Just understand your business is unique to you and what you've built. And the formula has to be adjusted for what you've built. And on that note, I think we've kind of covered it all today that I have to share. Chris, is there anything closing remarks, points, things you thought we missed, should add? I mean, I know we made the calls to action to do your diligence, but is there anything else we should throw out there for those listening?
no, just start getting prepared. If you don't have an exit plan in place, please reach out. We can help you do that. Risk free, completely confidential.
Mm-hmm.
That's what we're here for. Just to give the best advice we possibly can. Yeah, we want to see a deal get done and help get you to the closing table. But even if it's just to have a 30-minute conversation, I'm open to it and happy to do it with anybody who owns a business and wants to hear what I have to say.
That's right. We're talking gold advice there for the golden generation. Decades of experience here, ready to help you. And if you're smart, pick up the phone. You'll call us today. And if you're curious how to find us, I am 225-201-0202. Christopher, give them your number.
I am
Just don't call 444-4444 because those guys aren't going to really help you. Those law firms are great, but no, we're not those guys. We get it done the right
What was
way.
that? Was that Gordon or the other one?
That is Gordon. My neighbor across the street, Gordon McCurran, over here of his
Okay.
call center in his office building. Bless his heart.
Seen
Love
way too
football,
many
glad he
billboards.
supports the Tigers, but I don't always love the commercials. I get a little tired of them. Well, on that note, Christopher, it's been a great podcast. I'm glad we got to talk a little bit on a different topic for once. If you're out there listening, follow, subscribe, LinkedIn, Spotify, YouTube. You can find us, and we look forward to chatting with you next week and sharing some more insights on the Steps of Soul podcast. Y'all have a great day.